Schedule T1 is where you will show the difference between the estimated net GST processed on Schedule T and the actual GST processed in the client's ledger. To complete this schedule, you need to know the opening GST account balance. In this case, it's $14,000 credit. You need to also know the amount of GST paid as recorded in the client's ledger. Both these figures will come forward automatically. If you've done the previous year in the work papers, it will have the closing GST account balance from the previous year, which will be put in this box here, and the GST paid per the ledger has been obtained from Schedule G, where you analysed the transactions in the portal and noted the GST that had been paid to the taxation office. By taking the opening and closing GST account balances, netting off or adding on the GST paid per the ledger will give you the figure for the net GST processed in the general ledger. This is not the GST assessed, it is the GST processed on individual transactions, sales transactions and input transactions in the ledger. There might be hundreds, there might be thousands of these entries, but this simple calculation will work out the net GST processed in the ledger. As indicated, you have to put in the closing balance here per the ledger to complete this formula. Having done that, you will then have a comparison between what you estimated the net GST on Schedule T was compared to the actual GST in the general ledger. Should there be any discrepancy between these two items, it will show in this box here. Say, for example, the GST actually was, instead of 19,000, it was, say, 18,000. You can see that that will give us a net GST processed amount of 29,000. Our estimated GST processed is still 30,000. The discrepancy of $1,000 requires explanation. It's not saying the ledger is wrong, it's just saying you do not yet understand what the ledger processed figure means. So you can see that the main options have already been predefined here, and it is required that you allocate this unexplained discrepancy to one of these four categories. It's either due to errors in the profit and loss proof that you completed on Schedule T, so you're saying that you can't identify the items but you believe the error is in your proof. The second option is that there's an error in the general ledger somewhere and you haven't identified it. The third option here is another explanation, and you can put whatever description you like in that category. The fourth and final option is to say, well, you don't believe the amount is significant. If you do that, then no further action would be expected. As to determine what is a significant amount, that's a matter of your professional judgment, and others may have a different concept of what is significant, but just bear in mind that even a difference of $1,000 actually means that there's $10,000 worth of transactions that you do not understand the GST impact on. So it's more, even though it might be only a small difference, it's actually multiplied by 10 to get the value of the transactions that the discrepancy represents.